All right, good afternoon, everybody. Should be live on YouTube and live here in our wonderful virtual trading floor. Good to see you all. I'm in a little bit of a rush today. Actually, let me do this disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Varun is making me laugh. The position disclosure is the same, except I'm not in this NEO, which I got out of after hours yesterday. But everything else on there is the same. All right, yeah, I'm in a little bit of a rush. I have an early dinner that I have to get to today, so I kind of need to be like out the door by 5 o'clock. We have a lot going on. I want to try to review things like we normally do. We're waiting on NVDA to report. NVDA should be coming out at 4:20 in about 9 minutes from now. So I'll take a pause on the afternoon meeting and we can analyze NVDA results, because this is potentially an extremely important earnings report here. In some way, it might be the most anticipated earnings report of this entire earnings season. So we'll definitely take a pause to see that. I want to get through a couple of questions that were asked to me, but I really need to make sure that I shut down this afternoon meeting. 4:50, 4:55. We'll see how it's going. But anyway, so jumping right into things, the market closed red. Who would have thought? Who would have thought? It's actually just an inside day for the SPYs and the Qs, so it's not that red. SPYs down 0.32%. The Qs here down 0.665%. IWM down 1.4%. Relative weakness in the Russell. There was a battle with the relative weakness between the IWM and the Qs today, and guess what? The IWM lost it like it always does. Though I think the NVIDIA report today might have a significant influence on whether that QQQ outperformance is able to continue after today's trading session. Big picture here, the market had gotten pretty extended again. I know at the end of yesterday we never reached $10 extension from the ADMA, but one of the things that I've been pointing to is the spacing between the market and the 21 EMA. The spread between the 8 and 21 EMA has really widened out here, so not necessarily all $10 worth of extension should be treated equal. We're much more stretched here as we approach $10 worth of extension from the ADMA than we would be back when these moving averages were at much closer prices and the spread between those moving averages wasn't as wide. So the market is extended. It's been a hell of a move. We broke out of a bull flag yesterday and gave continuation. So the big thing that I wanted to see today, even though technically it's a lower probability situation, is if there's any chance that yesterday's bull flag breakout is actually becomes a failed pattern. And the reason why I think that there's a chance that could happen is because the bull flag break yesterday happened before the ADMA caught up. There's also a wide spread down to the 21 EMA. So most of the time, and I know it's kind of at the bull flag base now a whole day later, most of the time in order for bull flag continuation to occur, you really need equilibrium to catch up to the base of the flag. And when that doesn't happen, I have seen a little bit of a higher probability, anecdotally, of bull flag breakouts actually failing. So I was just kind of paying attention to the levels in which we broke out from in the SPYs and the Qs to see if there's a chance that we could pull back beneath them. Again, it's a lower probability situation. Even if it's a higher probability situation compared to normal of an actual bull flag breakout failure, sorry, I just was turning on the camera for the YouTube and I kind of lost my train of thought there. So the bulls are clearly in control. So it's a lower probability situation that we get the failure, but it's a higher probability of a bull flag failure than normal because the moving averages hadn't caught up. That's what I'm trying to get across. So I really wanted to pay attention to in the SPYs like this, 450, 150 level to see if we get back below it. And on the Qs, I wanted to pay attention to, I was saying the space between 388 and 386 really to see if we could get a failure. The Qs did trade below 388 today, but never below 386. The SPYs never traded below the 450, 150. So no confirmation of a failed breakout. And if anything, it's just a tight inside day. A tight inside day is also technically bullish. It's a time correction. You potentially are even setting up for that 1, 2, 3 play, where day 1 is a momentum day, day 2 is a rest day, day 3 is continuation of momentum. I think that the NVDA report here is going to have a lot to do with how we break this inside day. So the inside day high and low will be in play for tomorrow, and inside and up you're potentially looking at a 1, 2, 3 play for continued momentum, and inside and down, and maybe finally maybe we're actually getting price correction. It's right as, and I had such a busy day today, I still didn't get to finish reading Pat's note this morning, but I did see that it sounds like the CTAs are kind of a non-factor now after all of the massive amount of buying that they've been doing. So that some things are finally potentially starting to come off the bid here a little bit, as we've had such a massive move over the course of November, which is actually what I was saying going into yesterday's morning meeting, though we continued up in a massive way anyway, that I would expect that if we still can get upside continuation, that it's going to be more via kind of a normal higher high and higher low, maybe upside grind, than the insane momentum that we've seen over the course of November. That was immediately proved wrong in one trading session as of yesterday, but maybe I can redeem myself if we don't have a 1, 2, 3 play here for the market. So overall, SPYs and Qs looking massively bullish. IWM very disappointing with its underperformance once again today. The TLT finished flat. It was up at points, it was down at points. I've still been of the thought process that TLT moving higher, and we can pull up that TLT chart, you can see how strong it's been recently, should be most beneficial to IWM related names, because I think that the IWM names are trading cheap for a reason. That reason is because interest rates are so high. If they have to potentially refinance at higher interest rates as their debt cliff kind of hits, they can have problems. So therefore they're trading at probably appropriately cheaper prices. But if the interest rate situation improves at all, I would think that it should have an outperformance effect on these IWM names, and that has just not been true. IWM underperformed again today on an intraday basis. I was very frustrated off the open when the whole market gapped down, but the IWM got destroyed in the first 20 minutes, whereas the SPYs and Qs went sideways. I remember when the IWM was getting really extended here, I was saying this IWM is due for a bounce, but it's right as the SPYs and Qs have given us this bearish consolidation with the ADMA catching up. The IWM should be bouncing higher based off of its extension, whereas the SPYs and Qs are setting up here to actually break down. I didn't think that I could actually get, and it actually did happen, any sort of environment, even for a short period of time, just because it hasn't been happening, where the SPYs and the Qs can actually break down out of their bearish consolidation while the IWM price corrects back higher. Yet it actually did happen for a period of time. The IWM was very relatively weak early, and then it showed strength into this bounce as the SPYs and Qs broke down. So we did hit a certain point in the trading session here, between 10 and 11 o'clock, probably closer to 11, where the Qs were actually down more than the IWM was. And then from that point on, the IWM went into this slow downside grind, whereas the Qs went into a sideways / upside grind. And then at the end of the day, we once again have QQQ outperformance from the IWM. So for me, that continues to be a little bit frustrating. Not surprising, because that has been the pattern, but frustrating. And at this point, it's wait and see. I think that if you have a chance of getting any IWM outperformance, it's going to come with the back of a weak NVIDIA report, which we will see what's going to happen with that in about 45 seconds. So that's kind of the broad market update from an individual stock trading perspective. I got interrupted on my morning research today and missed a big chunk of it. So for me, that just meant to take a half step back during the trading session, and I did that. A couple ideas that we're looking at, I got like 20 seconds here, like Baidu. Baidu had a big opening upside move, but I think that they made that buy really difficult. That AIG we were looking at was okay, but it's kind of a slow mover. All right, 10 seconds on NVIDIA, so let's see what happens here. Initial tick is higher. Initial tick is higher. $8 here initially, trading up. NVDA gross margins are a beat. Wow. Revenue's a solid beat. Data center revenue's a solid beat. Gaming revenue is a beat. And it's trading lower here now. Oh, come on, inside bid. There we go. Adjusted EPS beats. Sales beats. Everything beats. They're trading this thing down. The data center revenue is still a beat, but it's not enough. This is what I thought might happen. This thing is so priced to perfection right now. I'm not trading NVIDIA. I'm actually managing my U-Pro and T-Triple-Q positions into this down move. $35 was the implied move. Looks like we just got down there and held it just about perfectly. Big bounce. This thing's going to be all over the place. Every number I saw there was a beat. I haven't seen any guidance. I don't know if they haven't released guidance. I don't know if they release it in the call. Guidance will be the most important factor here. I feel like when they had that blowout quarter, they had released guidance with all the other numbers, and that was what ripped the stock higher. So if we're not seeing it right now, it's interesting. They beat the guide? Okay, gotcha. NVIDIA expects sales to China to decline significantly. It doesn't sound like new news. That adjusted gross margin miss, I mean, adjusted gross margin is 75% versus an estimate of 72.5%. That number is insane, the margins on some of these companies and what they're able to do. Our strong growth reflects the broad industry platform transition from general purpose to accelerated computing and generative AI. I mean, that report looks fantastic. I know that this thing was priced to perfection, but I don't really know how it's trading down right now. All right. Starting point in NVIDIA was like $500, so we've almost worked our way all the way back. Not a great day for me to have to try to rush out early. NVIDIA sees Q4 revenue at $20 billion plus or minus 2% versus an estimate of 17.9. I mean, these numbers are mind-blowing. And so it's incredible that the stock is trading flat to down right now. And it just shows you how expensive the stock is coming into this report based on where they traded it up to. I don't see anything that you can point to in this entire report that's bad. China sales are expected to slow significantly. We know this already. And it's not because of NVIDIA, it's because of the government. They beat on everything. Is there a single metric that they didn't beat expectations on? If there is, I don't see it. Oh, they missed on automotive revenue. Thanks, Bill. Very small miss. 261 million versus 267 million, basically. Ugh, if Sean called me right now, I can't answer that. Let me just text him and tell him I'll call him back. All right, so we'll keep an eye on this. It's an incredible report. The stock reaction is interesting. The stock reaction is interesting. It's basically back to the starting point on incredible numbers. Seriously incredible numbers. So we'll see how this thing ends up settling out and how it settles out tomorrow. As it's at this point, it's really hard to say. The numbers are incredible, but they kind of really cooked this thing into the report. It trades expensive, so we'll see here. But yeah, back above $500, it makes sense to see a little bit of an uptick because anyone that's sold there is now out of the money. Okay, I got through in that 10 minutes because I blasted through it pretty much everything I wanted to talk about as far as the big picture. So I do have a few minutes here to turn things over to questions, whether they're about NVIDIA or anything else. I wanted to start with an email question that I got, which we're going to do here in the afternoon meeting instead of through email. But basically the question is as follows. The last couple of months I've been struggling a lot with my trading, so I wanted to send you this email. My goal right now is to be able to make 1 R every day. Unfortunately, I'm failing badly in my goal the last couple of months. Do you have any advice on how to achieve my goal to make 1 R per day? My impression is I need to sharpen my scalping style a little bit more. Is there anything particular you would advise me to do? If yes, what would that be? are there any other resources? Okay, so that's the bulk of the question right there. So yeah, so I wanted to go over this because I do see this come from traders once in a while, and you know, the trader here has given himself a certain goal. That goal is to achieve 1R. So I don't use that terminology like 1R in my own trading, but obviously I understand what that means. So basically what the trader is looking to do here is they're trying to make 1R per day. So what that basically means is whatever this trader is willing to risk in a given day, his goal is to make that amount in one day. So let's just use simple numbers. I like to use simple numbers again because we have people dealing with all different types of accounts, all different account sizes. Let's just use these numbers. Let's say that your average risk per day, your maximum loss or drawdown that you allow yourself to trade down to in any given trading session is $500. So 1R on that basically means he wants to make one risk metric on a given trading session. So that risk metric is $500. So if this trader is trying to make 1R, in my example, he would be trying to make $500 per day on any given day. So the positive here, which is where we should start, is that the trader has goals. The trader is very risk focused. That's great. Yes, I agree with you. I agree with you, Dennis. But that's definitely not what he means in this question. He means in a given day's worth of trading session. Most of the time, when we're referring to 1R, it's exactly what you're talking about. Most of the time, when someone's referring to 1R, they're talking about in an individual trade. With this question specifically, this person's talking about a risk unit. It actually does change a little bit. Dennis here is saying that my answer isn't going to change no matter what. It actually has a little bit of a change to it. So the first thing that I would say is I really don't like the idea of this sort of upside goal. The positive, and I wanted to start with the positives, is that the trader is risk focused. And the trader, I know, is never really violating his downside risk management rules. So whatever that 1R is on the downside for a day's worth of trading, let's call $500, this trader is doing a great job of never allowing himself to exceed it. But the upside's not there. So what I don't like about this idea is I don't like upside limitation. And this is where the problem comes in. I have seen traders be successful in this business, though it's certainly rare, who on individual trades are one-for-one traders, meaning that, because at the end of the day, trading is math, right? At the end of the day, trading is math. And in order to be a successful trader, you have to get yourself there through the math. That's the only way that this can ever work out. So the math is risk, reward, and probability of success. Very simple math. If you can risk one to make one and be right more than 50% of the time, net of any fees, then you are going to be very wealthy in the long run. But the issue is, with a few exceptions over the years, almost no trader I've ever met is actually successful with the numbers that I just described. Most of the traders that I know who are successful, they are actually wrong more often than they're right on their trades, but their risk reward actually makes up for it. So again, let's just use very simple numbers. If you risk an average of $100 per trade, and your goal is to just make $100 per trade but have a more than 50% probability of success, I have seen people who have actually been able to do that successfully. It's very rare. Most of the better traders, if their risk is $100 on an average trade, they are making $300 or $500 or $1,000 when things actually really work out. But then their success rate could be 40% or probably even a little bit less than that, and they could still be very successful in the long run. What I've never seen anyone ever be successful at, ever, is when we're talking about now, instead of individual trades, when we're talking about a full day's worth of risk reward. I have never seen anyone be successful where their bad day is they lose $500, their good day is they make $500, and that trader is able to be successful in the long run. I have always been a huge believer in limiting downside and leaving upside, whether it's for an individual trade or for a group of trades that constitute a day, leaving that as unlimited as possible. So again, just to repeat it, if your goal as a trader is to make 1 R per day, and in our example, we're saying you risk $500 in a given trading session, and your goal is to make $500 in a given trading session, and as soon as you're up $500, you're closing out of your positions, I made it, and I'm moving on, you're not going to be successful in this business. I mean, maybe you will be, but you would be the first person that I've ever seen who has been able to do that. You need to be able to make it so that if your bad day is that you lose $500, that you can have a day where you make $500. That's fine. You're not going to be upset by that, but that's not the goal. Your goal is to put yourself in a position from a risk-reward perspective over the course of multiple trades throughout a trading session where you can have days where you make $1,000, $1,500, $2,500, where you make a multiple of what that bad day is. And I can tell you, because I've analyzed my own trading over the course of the 14 years or whatever that my career has been ongoing in the prop business, and I've also analyzed the trading of hundreds of other traders over the course of the year. And when I look at the math on any trader, whether it's myself or anyone else at the end of a given month, it almost always works out this way. I'm looking at your account because you are not trading successfully. This is exactly what I do. The first thing I want to know is, what's your maximum loss? The first thing I do is I scroll down through the month and I look at every single time that you went past that maximum loss. How many times did it happen? How bad was it? Most of the time, that's all I need to do. I can stop. Most of the time, I can stop right there. Trader is saying his maximum loss is $500, but on this day he lost $1,200. On this day he lost $1,500. On this day he lost $800. And on even if it's just a couple of days over the course of an entire trading session, where you let your loss that day just blow past what your maximum loss is going to be, is a very high probability I'm looking at a trader who is not profitable that month. And that's why I end every single morning meeting the exact same way. Good luck, trade smart, and manage your risk, because I understand that risk management is the key to success in this business. I understand, and I've done it, that literally one undisciplined day in an entire month can ruin an entire month worth of trading and make it so that you are not profitable in that month. And it's as simple and as difficult as that, honestly. You need to have the utmost amount of discipline on your downside if you want to be profitable month over month. So most of the time I can just stop right there. With this trader, that's actually not the case. And that's a little bit of a rarer problem, but I've seen it with other people as well, where I look through that person's month and I'm like, okay, wow, look at that. Not a single day of a loss more than $500. Not a single day. That's great. A lot of the times, I don't even need to see the profitability numbers, and this trader's probably doing okay. But then, if I look at the upside, and all you're ever trying to make is that 1 R per day, so your P&L is never above 500, and as a matter of fact, it rarely gets to 500, because the entirety of your approach is a reward limiting approach. Then once again, now I'm looking at a trader who's actually probably going to be in a slow bleed out. You're not going to miraculously, blow up your account in one trading session because you had terrible risk management, but you're just going to continuously lose little bits of money, little bits of money, little bits of money, because the math is not going to be adding up. You're still going to throw in down days. You're still going to have Look, this is the other thing that we got to remember, is we work in a game of probabilities. I don't care how good of a trader you are, you will not make money every day. Cut and dry, period. You're not going to make money every day. You're not going to make money in every trade that you put on. You will have down days. It is the nature of this business. You will have down days. You will have trades that fail. You're going to lose money on given days. We work in a game of probabilities. And that inherently means that even on certain days where you do everything right, you do it all by the book, you'll have a day where you lose money. It's just because the probability was against you, and lower probability situations occurred even though you traded within the confines of your edge, and your edge actually puts the overall probabilities in your favor. So you need to have game plans in place for your trades. So now, okay, let me run one more scenario for you. Let me show you the scenario of a trader who is profitable 11 out of 12 months a year. I look at that trader's month, and once again, I see that this trader has never exceeded that maximum loss. And on the upside, again, let's say that maximum loss is $500. On the upside, all I need is a few trading sessions the entire month where you made a multiple of what that maximum loss is. And now I'm looking at a trader who's making money almost always. It will basically almost be a guarantee. If you never allow yourself to lose $500 in a given day, but you show me, let's say, 3 trading sessions over the course of the entire month where you made $1,500 or more, or you made 3x your risk, I can just about promise you I'm looking at a trader that's going to make money that month, and every other month that the trader is disciplined enough to be able to do it. And that's why we say, and this is one of the things that's actually so hard about trading, that it's a marathon, not a sprint. We, from a psychology perspective, deal with certain things like recency bias with our trading, where we think in the moment, this trade is so important. This one trade is so important. Oh my God, I can't believe this one trade's not working out, and I'm going to lose my risk on this trade, and I'm going to hit my maximum loss for the day. And then you hit that maximum loss for the day, and we say, oh man, I can't sit here down my $500. Look at this trade. This trade looks good. I'm going to take this trade and make it back. And then next thing you know, that trade happens to fail also, and you finish down $900 in the day, and now all of a sudden I'm right back into that first situation where I look through at this unprofitable trader, and I see just all it takes is a few times over the course of the month where you blew out beyond your maximum loss because you couldn't keep that level of discipline, and now you're unsuccessful. As a matter of fact, one of the worst things that can happen to you is that you're down by your maximum loss, let's call it $500, and you take that next trade, and that next trade works great, and you finish up $100 on the day. That's actually one of the worst things that can happen to you, because you just reinforced that doing something that's actually going to be bad for you in the long run can yield a positive outcome in your brain, and now you're gonna do that again consistently going forward. You're gonna be down $500 and you're gonna say, oh, I'm just gonna take this next trade. Remember last time I got back to profitability during the day? But again, I promise you that what matters is really almost never. What matters is never that individual day unless you make it matter. And the way that you make it matter is by having your loss be significantly more than it needs to be in order for you to be a consistently profitable trader. Otherwise, it doesn't matter. You look back at the end of your month and you don't even remember why, oh man, I finished down on my max loss that day. What happened again? I don't remember, because it's one of, 4 times over the course of the month where I finished down at my maximum loss. And guess what? It doesn't matter. Because you've got other days where, even though your goal is not to make $500, not to make 1R, you'll have days where at the end of the day, you're closing out your positions, or the way your trailing stops worked out that day, or whatever, your P&L happens to be about $500, and that'll negate some of the down $500 days. But then again, if you can just peg in 1, 2, 3 days a month where you make a multiple of that risk amount, now I'm looking at a profitable trader. But if your goal is just to risk $500 in a given day to make $500 in a given day, I'm going to be very surprised if you're going to be able to be a profitable trader. This is probably where some of your frustration has come into play, because you say in your email here that you gave yourself this goal a couple months ago. I wish you had sought my advice in that afternoon meeting a couple months ago when you were planning on making that goal, because we probably could have saved you some of this frustration. I'm probably going to be looking at a trader, if that's what your goal is, who is doing a slow bleed out. And, you know, again, I'm not mentioning this trader by name, so I'm not calling anybody out, but when I'm looking at your account over the course of the last few months, I don't see a disaster in there. I don't see a disaster in there. I see exactly what I would expect to see based on what you're telling me, which is a slow bleed out over the course of the last few months, because the math behind the numbers simply is not going to work out. So I think that that's the most important thing to review based on the question that the trader had. I think that the math that I just described, and understanding it, and understanding the discipline and psychology that's necessary to allow the math to work out, because again, we get so fixated on that trade that we're in right now, what the P&L is on the screen right now, that we really struggle to be able to focus on a lot of these bigger picture things in the given moment. But you need to make sure that your risk management rules trump everything else, because the truth is, and then you're asking me a little bit about, you know, trading styles and scalping styles and things like that, is I genuinely think that the trading style matters less, because I've seen people be successful in so many different ways in this business, and I've also seen people fail in this business implementing the exact same strategies that I've seen other people be successful at. And the difference, once again, comes down to discipline on risk and game plan for reward that can enable the numbers to work out in exactly the way I'm talking about. I've seen swing traders, I've seen scalping traders, I've seen day traders, I've seen pairs traders, I've seen fundamental traders, I've seen technical traders, I've seen tape reading traders, I've seen algorithmic traders, I've seen people. I've seen all that where people are able to be successful, and I've seen all of that where people have not been successful. And again, I think it matters less the style and more the strategy. One thing that I would say though, because you know you are specifically mentioning that your focus and that what you're working on is a scalping style of trading. All that scalping means, first of all, is short duration trades, right? Trades that you're in for short periods of time. That could be seconds, it could be minutes. Generally means that you're probably not doing a whole lot of swing trading. What I don't like, though it can actually work, and going back to where I said that I have seen traders who have been successful, though it's very rare, who on individual trades, they risk one to make one, though on a given day, like, so you could be a trader who risks one to make one on every trade that you take, but on a given trading session, you are risking one to try to make 3 or 4 or 5 on the overall P&L, and that I think can potentially work, which basically means that this trader is taking 1-for-1 risk reward trades over and over and over again. If he risks $100 per trade, has 5 in a row fail, he's down $500, he stops. But if he has 5 in a row work and he's up $500, he says, all right, I'm willing to risk, you know, you can do like a trailing stop loss on your P&L also. I'm willing to risk the 500 that I've already made in order to have my 500 become 1,000, and my 1,000 become 1,500, my 1,500 become 2,000. I've seen people do that. Again, it's rare. My issue with more scalping style strategies these days is I really don't like that. I think that successful trading generally, and again, I have to say generally because I have seen a couple people, and I keep emphasizing that it's not many, who have been able to be successful where they trade risk reward on 1-to-1 and they've been able to put it together. I personally really dislike any reward limitations. I'm a very big fan of, all right, you know, get your risk covered I like to get my risk covered a lot of times at 1-to-1 risk reward ratio, but keep a percentage of your position to try to make a multiple of what you risked. Even if you're a scalping style trader where you're, whatever, you're a momentum scalper and you keep the stop losses very tight. I know Judy, if Judy's listening, that she's a scalper type trader, a momentum scalper type trader, and she's able to do a lot of this very successfully. But I also see, if she's listening, that when trades are in her favor, sometimes she will hold those trades for a little bit of a longer hold to try to get more P&L out of it. And I'm a big believer in doing that. I really don't like reward limitation. I like risk limitation. And then I want to have game plans in place for reward maximization, not reward limitation. Risk limitation, reward maximization. That's how the numbers, I think, can come together, at least they do for me, for individual given trades, where you can actually, I think it's easier that way to then, going back to a full day's worth of trading, to have a multiple of what you were risking in terms of upside P&L. So that would be kind of my answer to you on, strategy. But again, if you're working on continuing to sharpen that strategy, then keep working at it. That's good. I would also just kind of note, and again, this might be more me personally, it might be my personality, and trader personality is really important. You need to know what's right for you. I've found personally that the longer that I've been in my career as a trader, that the longer my average hold time has become. When thanks, Bill. I see your message out of the corner of my eye here. I'm just about out of time, so I'm gonna have to run really soon. I have found that the longer that I've been in my trading career, actually the longer my hold time has become, and that has actually really increased my overall reward to the risk on trades that I'm putting on. When I started as a new trader in 2010, again, it was a very different market environment. We traded very differently back then. The strategies that I was able to utilize in 2010, 2011 to be able to make money are strategies that literally do not work anymore. So that's why I don't teach them, because I'm not going to teach things that don't work. A lot of them were tape-based level 2 style strategies, but the market has evolved away from those, where they don't. I was actually even in a conversation today, and I'm talking about it as a manual discretionary trader. We used to be able to utilize level 2 and tape and depth of market to be able to successfully trade off of buyers and natural buyers and sellers that we were able to identify in the market, and kind of trade off of them, and be able to make money off of that. But I was actually even having a conversation with algo guys today, and that stuff stopped working for me as a manual discretionary trader, I feel like, in mid 2012, and was dead by the beginning of 2013. But I think that for like HFT algo folks that were out there with server colocation and raw market data and all that stuff, they were actually able to continue to make money off of some of that same tape stuff that I used to be able to do as a manual trader for actually significantly longer. But the conversation that I was having today was that even for those guys, the space has become so competitive, and the things that you're leaning off of as a tape-based trader have gotten so much more difficult to identify, because the market's become more efficient, and the algorithms that are working institutional orders have become so much better at what they do and hiding their flow, that it's hit a point here where a combination of super high competition plus a more difficult environment, I think, has finally even reached the point here where for the HFT algos, they don't even have an advantage so much with level 2 depth of market tape reading trading. And what I tell people all the time is that it's still a good skill to have. It benefits me particularly in after hours earnings trading. That's where I find that I can still read a much more pure tape and get some information from it, and potentially even trade off of it. It sometimes helps me from an execution perspective. I sometimes can realize I need to increase or decrease a bid or an offer by a couple pennies in order to make sure I get the fill, because it's something that I'm seeing that's happening on the level 2. But those strategies are gone. So you know, if you're talking about scalping type strategies and competing on very, very small time frames, you just don't have an advantage there in the same way that we did 10 plus years ago. So what I tell newer traders now is focus on the charts, not the tape, and focus on, you know, especially on the reward side, having a little bit of a larger time horizon. I've also found that as my career has advanced, and I'm going to be late for this reservation if I don't round this up soon, I've also found that over the years, I've hit the point with my trading where I generally, and this is definitely a general statement, where I find pure only day trading to actually be reward limiting. I think that you should have quick trades on failed trades, generally. But on trades that are working for you, also, this is a general statement because it depends a little bit on things like market environment, and you can argue that a range-bound market environment, which is a lot of what we've seen this year, is not going to be as good as for a trending environment. I realize that there's other factors here, so I'm speaking generally. That you want to try to have longer holds, especially on your winners, to let your winners actually work for you. That in turn gives you the better risk reward. That in turn can enable you to have the larger upside days versus the downside days. And then you still, though, because it's still the most important thing, and this will be the last thing I say, and then I'll round it out. Still, no matter what, the most important thing is the downside risk management and never allowing yourself to lose more than whatever you are establishing your maximum loss at. So any trader who's here who's not happy with their profitability, my challenge for you for tonight, it's the end of November, we're working towards the end of the year. Go back over the course of the month of November, go back over the course of this calendar year, go through your trading runs for the entire year, count how many times you went past your maximum loss over this month and this year, get your calculator out and figure out how much math that was, and then take that number and put it onto your account right now. And ask yourself if you'd be happier with that number or happier with where it's at. So on that note, I know that there's a lot of other commentary in here and probably some other questions. I really apologize, I can't go through it. I need to go, or I'm going to be late for this thing. So I'm gonna wrap it up. Have a fantastic night, and I'll see you all tomorrow, and we'll see how this NVIDIA settles out.